Hello, ladies and gentlemen. It's Modern Investing on Pod TV. My name is Sasha Star, and today we have Dr. Milan Sambarak. Welcome to the show.
Thank you for inviting me. Glad to be
Yes,
here.
always my pleasure. And Jim Eat from Eat Foundation. Welcome to the show, Jim.
Thank you for having me, Sasha. I can only stay for a little while. I hope you understand.
Okay. So let's go right away to Milan. What is your message to our listeners?
My message can be stated in 4 words. In 4 words, I can show our viewers how to outperform the vast majority of investors, professionals included, after fees. And the 4 words are buy and hold SPY. So
Okay,
most people don't equal that, professionals included.
okay, fair enough. Jim, what do you think about the strategy?
Well, um, my feeling right now is I think the thing that's going on, regardless of what your strategy is that you're in for a rough ride. Um, Trump's approval rating has plummeted lower than any president's at this time of year for the last 80 years. This is supposed to be their honeymoon period, and the approval rating is dropping like a stone. A spokesperson from Franklin Templeton said treasuries are a risk asset now. There was a report that the domestic product shrank, and this is hitting the stock market today. The domestic product is shrinking means that we're in a recession. We won't get the numbers in, and they won't officially classify that for months. But we're in a recession right now. This is entirely due to Trump's policies. There's no other explanation for it. And the trade impact, the trade tariffs, and these types of things, they're driving up prices, so they're inflationary. And the Fed might have to cut interest rates, which I think is a good idea in general, because the economy is shrinking. Now, most Americans who voted for Trump thought he would be good for the economy. Just the opposite is true. He's been horrible for the economy. The domestic gross product was rising every year under the Biden administration, and it was growing. The economy was doing extremely well. And with Trump's policies, has put the brakes on it. And what he's caused is chaos in the world trade market. And what people don't like is chaos. So all of our prices will go up. Stock market is going down, and this is entirely due to one man.
This is
Wow.
There's some good news here, James. The good news is that an increasing number of Trump's former friends are turning against him. An increasing number of Republicans who used to be on board with Trump are no longer there. Now that number reaches a high enough level, he could be impeached out of office. That has never happened in the United States history. No president ever has been impeached out of office. Out of office, several have been impeached, but they survived. Richard Nixon would have been impeached out of office had he not resigned. But it might happen to Trump given the fact that the number of people of his former friends, a number of his former friends are turning against him.
Yeah, they want to get reelected.
Absolutely. Well, I would like to introduce Shaquille Latimer, who's been around quite a while in investment world and manage billions of dollars in his hedge funds. Welcome to the show, Shaquille. Great to have you.
Good
And
morning or good afternoon for you guys.
you,
How are you all?
And
Shaquille,
good
you
morning
came
here
at the
too.
right time because we need somebody to defend Donald Trump and his economic policies. So please go in. Come on.
Okay. I've got it. Now, Jim, you got to be fair about these things. Milan, you got to be fair about these things. Donald Trump said, I'm totally stealing this off John Stewart. Donald Trump said he was going to make the economy go boom.
But not that much boom. A little boom's okay, but not that much.
But just think about it logically, right? As soon as he's got Greenland off Denmark and he takes over Ukraine, he takes over the Gaza Strip, puts some golf courses there, and of course takes over Canada, the economy will be fantastic for America. So just give him some time.
Oh, he just needs time. I see.
Yeah.
100 days.
No, look,
I've given him 100 days, and he's shown me.
but you've got to give relationships longer than that,
Oh.
especially
Oh my God,
especially when you
that's-
get back together with your ex, right? You got to give your ex time to look. I think there is obviously a lot of turmoil. My main concern with what he's been doing is not actually the tariffs in and of themselves. I think he's been far more aggressive. I mean, he did say he was going to put tariffs and all that sort of stuff, right? So
It's over
he,
at the same time. Shaquille, give me a break.
you know, hang on, let me finish. He did say those things. I think my main concern with it is he's been very, very aggressive about how he's been doing it. And I think he's probably gone a little bit too far. And hopefully, what's her name? Susie Wilk. You know who I'm talking about. Hopefully she can try and rein him in a little bit. But look, my main concern actually, and I think what the business community is most concerned about, is the lack of stability. So I've been saying for many years now that I've been very seriously considering opening up a branch office for some of my companies in the United States, and I would like to do that. However, I'm not going to do that if I don't know how to plan out the next 12 months, the next 2 years, the next 5 years, right? I need to have some sort of clarity about exactly what's going on. And so I think that that's probably one of the things that's the most damaging for the US right now. They are straining relationships, as I said on the other show. I don't think that's insurmountable. Donald Trump's only going to be there for a while. You get the midterms next year. If he hasn't turned the economy around, if the economy is not, if the stock markets aren't at highs and people aren't buying eggs for $1.50 a dozen, then you're going to have a real backlash, not just against Trump but against Republicans as well. I don't think in the Senate, but that's only because of what Senate races are up next year. So I think Democrats will struggle with that, not because Democrats do anything wrong, just because of the races that are there. But certainly they could win back the House. And if he loses the House a second time, that'll be a reflection of Americans' opinions. But I think he's got time. It's early days. I think he's got time to turn things around. What I will say for the purposes of our show, though, for investors, is what I've talked about before. Look, you've got different types of professional investors, right? Private equity and long-term buy-side hedge funds and things like that, insurance companies, banks, all of those guys, they buy the market or they buy sectors of the market and hold it for a long time, right? Milan, you talk about this quite frequently. Now, I would stand by that, what you say, Milan. Buy the market right now. You might have some pain, but in 25 years from now, it'll be fine, right? I think most people are looking for something a little bit more active than that. What I would say is if you have a look at the moment, and my numbers here are going to be a little bit off because obviously I'm on the show and I'm not looking at my other screen, but the NASDAQ normally leads the S&P 500. The NASDAQ's down 1.4%, something like that. The S&P 500 is only down 1%. My point being is that you can actually trade the differences between indexes. You can trade the differences between different asset classes. You can trade the differences between commodity prices, etc. So from a purely trading perspective, without going into the politics of what's happening in America, if you're concerned about the US dollar falling, hey, you can short the USDX, which is a dollar index. It's the US dollar against a basket of international currencies, if that's what you're thinking. If you're thinking the US is going to recover and the dollar is going to go higher, well, then obviously you can buy that. So there's a lot of trading opportunities. And if you're a good trader and you can identify that, then you can actually make some money out of this volatility.
What about holding silver and gold at a time like this?
Before I answer you, sorry, Jimmy, I didn't quite hear what you said.
Oh, I said that you're telling us about modern investing. I was just congratulating you.
Yeah, well, look, I think that most active managed, funds or managed investment schemes, whatever, if they're actively managed, these are the sorts of opportunities that they look for.
Mm-hmm.
I ran what was called a global macro. So the idea is that no matter what the market conditions are, we should be able to make money. And so as far as trying to look after your own investment portfolio, you watch Fox News and you'll hear what I think is ridiculous. Like Judge Jeanine Pirro the other day saying, my 401k is down and I don't care that it's down. Yeah, okay, that's great. That's really helpful. That's what people want to hear. I mean, it's ridiculous. You can't
I
say
care
that.
about mine.
Exactly. Now, will it recover? Is this just a little blip? Well, nobody knows,
Who knows?
right?
Right.
It's possible that the tariffs and a reduction in taxes will happen, and that'll be a great boom for the American economy. It's possible this will fail, or it's possible that Trump will roll this back altogether and then try to save face.
Yeah, I'm sorry.
The
We'll
point
get to
is,
Leon's question in a second, but
Yeah.
as you're describing your choice about coming to America, opening up a branch in America, well, companies have the same problem in the United States right now. They can't plan for the future. They can't invest.
and that's and that's exactly my point. I think it makes it very, very difficult for people to plan. And if for example, you ran a multinational company manufacturing manufacturing widgets, if the idea that Trump has is, well, by having tariffs and all this sort of stuff, they'll bring the manufacturing jobs to America. Look, maybe that's the case, maybe not. China actually brought out a what I thought was quite a funny meme with a bunch of Americans, sewing clothes in a sweatshop, right? I'm not sure, but my understanding of America, especially the wealthy parts of California I hang around in a lot of the time, I don't think they're not sure they're after that. I'm not sure that we're going to turn Jimmy into a seamstress anytime soon. But what you run the risk of is that companies will set up factories in America only to service American demand. And they'll continue to have their factories overseas to service overseas demand. The other risk that you have is something that you actually can't tariff. And I actually brought this up before the election last year, which is you can offshore back office functions, right? Your accountants, your customer service staff. I mean, we already see a lot of customer service staff that are overseas already. How are you going to tariff that? So, yeah, I think this is fraught with danger. I do respect that he's trying to do something different. People have been complaining for a long time that the status quo needs to change. So I do respect that. But as far as markets are concerned, there is some volatility in the markets, and I think that if you look past just buying and holding, there are some opportunities there. And that's not a defense of Trump, because I'm not here to defend Trump, but I'll certainly say that as far as investing is concerned, there are some opportunities. I would caution people, though, against betting against America in the long term. America is a very resilient country. I think that some of the comments that there's irreparable damage between America and its allies, I don't think that'll play out. Right when politics changes in America, relationships change. So have a little bit more faith in the United States, please, guys. As I said, if you want a short term, maybe take a short position. You can do that. Cover your risk in case the market jumps up. But there are certainly ways to trade this market without losing too much. Be safe, be secure. So your question, Milan, it's not that I'm against gold and silver. I just don't get it. And the entirety of my career in finance, and when I was studying finance, I've never really got it. You can't eat gold. You can't wear gold. You can't, so when people say it's a store of value, it's like, well, okay. And I kind of go back to one of the things that Warren Buffett has said multiple times over the years. He said the entire gold supply in the world is worth about $8 trillion. It's probably worth a bit more now because the price has gone up. But this is years ago he said this. He said, for $8 trillion, I could buy all of the agricultural land in the United States and Canada and Australia and half of Europe. If memory serves me correctly, he said something like that. What would you prefer to own? And I think that's a really important point. So I do understand that gold is a safe haven, but the US dollar is a safe haven as well. These things are supposed to be negatively correlated. And during COVID, for the first time that I'm aware of, the opposite correlation broke down. Gold, bonds, US dollar were all trading in unison. And actually, the cryptos were also trading pretty much in unison. That's really unusual. So I think that market dynamics have changed. And I think that with Trump being there, being a bit of a wild card factor, I think people have to be very, very cautious about what they're doing. And I really suggest that people look at spread trading positions.
I would like to
I'm
mention.
sorry, Sasha,
Yeah,
I have to leave, and it's because Shaquille's shirt is brighter than mine. And as I explained to you earlier, I'm sorry, but I have to go. And I'd love to talk to you further, Shaquille. Your ideas are always welcome. Thank you.
You've
Bye-bye.
got my number, James. We haven't spoken for a while, so send me a message.
Okay.
thank you, Jim. Shakil, I would like to mention something interesting that when you are buying today gold or silver assets, you're actually betting against US dollar because both silver and gold nominated in US dollars. So if it's a natural thing to expect that if dollar moves down, silver and gold will move up. That's just as simple as that. So the question is US dollar will move lower from this point? It's already moved lower quite a bit. So I'm not suggesting that it will continue uninterruptedly. Probably not. But general direction of US dollar is definitely down. Many things contribute to that. First of all, it's US debt. It's an absence or near absence of buyers of US debts. It's a last auction on 10 years old papers. They had to raise interest rates 3 times in the morning to attract the buyers. So, and this year, US has to refinance $9 trillion. Where are you going to get the buyers? So you have to raise, not lower interest rates, but to raise them. How good is that for the economy? So economy, that's another problem, is that, trade between US and China is all but done. There is no trade as we speak between China and United States. There is no much trade between Canada and United States. And Canada is the nearest country to the United States. So geographically, it's very natural that both countries would trade. And until recently, Canada was by far the biggest trading partner of the United States. What's happening with the tariffs? I don't think that Trump ever promised that he will put tariffs against all the world at the same time. That's never happened in history. So you have to have, I'm not going to even talk about his bankruptcies and his impeachments and all that stuff. No. He's just simply a very dumb person. And either his advisors are just as dumb as well. I don't think that anyone is qualified to be in the positions what they hold now. But even if they do ask Trump to adjust and change certain things, he wouldn't listen to anybody. He would fire anybody right away who will suggest to change something to improve something. Now, there is another damage, Shaquille, just one more thing, is that let's imagine that today or tomorrow, Trump cancels all tariffs. Okay, there are no more tariffs. Let's go back to April 1st, before Liberation Day. There are no tariffs. Everybody is free to do anything what they want. Now, the problem is that the damage has been already done, enormous. You cannot now come back to pre-tariffs world because of the damage that been already done and continued to be done over and over again. People in Canada, and I saw it myself, they stopped buying anything produced in or manufactured in the United States. And I don't think that Canada is alone. I think that all over the world, people avoid buying American. So where does American dollar will go, considering all that? Shaquille, please explain.
Right. So a couple of things. I know I'm repeating myself a bit. I don't think that relationships between close allies and friends are irreparably damaged because you got the midterms next year. You've got another election in a couple of years' time. I think that these relationships go stronger than just one person. That's my personal view. I don't have a crystal ball, but that's my personal view.
I will reply to that.
Donald Trump is a divisive figure, not just in the United States but around the world. It's a pretty it's a poor move, in my opinion, to offend Canada. Right? Canada is a proud country. They should be proud of themselves. They're also part of the Commonwealth. So, but if you screw around Canada, you screw around the rest of us. So there's 56 countries. They come to the defence if you touch one blade of Canadian grass. So, last time they did that, we burnt the White House down. So we won't go into that. Leaving the politics aside for a minute. What does a lower US dollar mean? Well, we know that during the Great Recession, when the Canadian dollar wasn't doing so well, what we saw was a rush of Americans that ran up to Canada and bought up assets. Now, I'm very familiar with some of the things that were bought in Vancouver and in Whistler, for example, because I'm close to that part of the world. So, that worked out really well. So if you're Canadian right now, you might be looking at America and saying, well, if the US dollar is cheap compared to ours, maybe it's a good time to buy up assets in the US. Maybe it's a really good time to buy up assets in Washington, D.C., because real estate, for example, has taken a real dive because of Doge and the sacking of all these staff and all the rest of it. And that's not going to last forever. Things normally return back to normalcy. So I think that there are some opportunities. So we can all have our opinions whether Donald Trump's a good president or a bad president. The question is, what does it mean economically, and what does it mean for us? The three of us are not American citizens, so or residents. So are there opportunities for us to be able to get involved in the US market? As far as a weaker US dollar is concerned with US exports, politics is one thing, but if the US dollar was to fall dramatically, it's not too dramatic yet, but if it was to fall really dramatically, what would theoretically happen is that US produced products would become a lot more attractive to people overseas. And so you would see a rush of money into America. And one example of this is what happened after the tragedy of September 11. The Australian dollar fell to below 40 cents against the US dollar. Now, what that resulted in was a massive influx of investment into Australia. And, when we get to the Great Recession, if you ask an Australian kid what the Great Recession was like, they're not going to know, because it was fine. It was a big boom in Australia because of all of the investment that came into Australia. So what I was saying is, when it comes to investing and managing your own investment portfolio, put aside your opinions or your heartfelt beliefs about Donald Trump and how America's running, and just look at the economic ramifications and what's likely to occur in the future. And you can structure your trading around that. I think you're muted, Milan. We can't hear you.
Milan?
Yeah, we can't hear you at the moment.
Okay. Shaquille, I agree basically with everything what you're saying. It's just a question from where we are today and where we're going to be a week, a month, a year from now. That's a very difficult question to ask. So if you're proposing that people should buy US assets that may go higher, it could. But gold and silver already going higher, and I looked at the charts of both gold and silver. It's just the beginning of a mega movement, because there is only store of value. Okay, you can buy Swiss francs, perhaps. There are some other things that you can do, but I think nothing can.
But you have to be a little bit careful here, Sasha, because buying gold because it's currently going up implies, based on what you're suggesting, implies that you think the US is going to have continued weakness. And my concern with that is we don't know, right? It could end up being that the US has a massive tax reduction and keeps the tariffs, and that leads to a boom. Now, we don't know that. We don't know. But one sec. So the other thing to look at is the yield curve is not currently inverted. So that's also something to look at. Now, one of the concerns is the yield curve was inverted last year, and generally speaking, when the yield curve inverts and then it becomes more normal, it's when it becomes more normal that a recession is likely to happen. But there's a wild card factor in that we don't know exactly how Donald Trump is going to manage the economy and manage the country right now. And we also don't know how the Fed is going to respond to it. So I'm not telling people not to buy gold, but what I'm saying is you just have to be a little bit cautious, and I recommend doing spread trades as opposed to outright positions. The other thing that I just want to very quickly say is that when Russia invaded the Ukraine, the euro fell to below $1 US. And I said at the time, and I'll continue to say now, that we had COVID, we had the instability of that conflict, we've got Israel, Palestine. There has been a rush to safety by people buying the US dollar. Now the world is beginning to look outside of the US, the world is beginning to look a little bit more attractive, right? So Europe is beginning to look a little bit more attractive. You're seeing more investment happening in Europe. And that could be affecting the US dollar because people that use the US dollar as a safe haven might now be saying, hey, actually, we want to move that money over to other regions of the world. And the Middle East as well is really experiencing a boom. I mean, you look at the property prices in Dubai, you know, they're just going through the roof. So I think that economic forecasting is very difficult, and I would just caution people against saying, I think Donald Trump's doing a really bad job, so therefore I'm just going to short the US dollar, I'm going to short the markets, I'm just going to buy gold, because
Can you hear me?
nothing goes up forever. Yeah, we can hear you, Milan. Yep.
Yes, ma'am.
Okay. Well, one thing I like to say about forecasting, Shaquille, we tell our members, we have about 300 members in this Monday morning millionaire situation, and we tell our members to read forecasts for amusement only because they're wrong so much of the time. Now, worrying helps because most of the things we worry about never happen. The first stock market was founded in Amsterdam a little more than 400 years ago, and every decline without exception has resulted in a return to normal and continued growth afterwards. And that's going to happen with this market as well.
Including tulip bulbs?
I don't know about tulip bulbs. Yeah, they maybe have been overpriced. They could have been overpriced. Yeah.
But you're right. Over the long term, you're right. But I think Keyes said one time, in the long term, we're all dead. So, I think for people that are trying to manage their portfolios and manage their retirement money and things like that, they want to have a bit of extra money and a bit of extra income to show them through. I think it is difficult, but you have to kind of look at the things that you think are likely to happen in the short term, as Sasha said, what's going to happen in the next week or the next month, but also have an eye on what's going to happen over the long term as well. And because of inflation, which is always going to happen, right? Even if it's low inflation, you're always going to have inflation. There is an upward bias towards the markets. And don't forget as well, if you're not happy with just the US, you can buy ETFs that like the MSCI World Index, for example, which is basically, all the stocks, all the major stocks in the world. So there's lots of things that you can do to try to improve your positions.
Would Warren Buffett and Peter Lynch agree with you about going outside of the United States? I don't think that they would. Both Peter Lynch, Warren Buffett, and other major investors are confining their investments to the United States. And the market will turn around, as it always has, and continue to grow as it always has, although long-term we're all dead. That's true. But we do have an estate which we want to be well off because we will be passing on our investments to our children.
You're absolutely correct. However, and I have the greatest respect for Warren Buffett, but if you compare Warren Buffett to, say, someone like George Soros used to trade the markets in much shorter time frames. Warren Buffett's different. Warren Buffett owns an insurance company, and his timelines and his time horizons are much longer than a lot of other people's are, and that's important. So yes, you can pay attention to what Warren Buffett's doing. But the other thing is that I'm sitting here in Australia, right? So the idea that I wouldn't invest in Australian assets that I know that I can watch on the news every day, the companies that I can see every day when I'm driving in the car, because Warren Buffett, an American from Omaha, isn't investing in Australia. I mean, that's not how I'm going to do things. That's not how French people are going to do things. That's not how Germans are going to do things. So again, I think there's opportunities everywhere. And the last thing I'll say is, I know that you normally only go for half an hour. The last thing I'll just quickly say is about forecasting. There was a report that I read a few years ago that said that if you look at all of the major stockbrokers and investment banks and you buy all the stocks that they recommend, it's kind of a crapshoot whether or not you're going to make any money. But if you sell short the stocks that they say to sell short, generally speaking, they're fairly accurate. And I think that speaks volumes as well. But as I said, look, if you think tourism is doing badly right now, take a short position against tourism and take a long position in the banking sector, or I don't know, whatever it is that you think is going to happen. I think that would be a more effective trading strategy than just buying and holding, unless you are prepared to buy and hold for the long term, in which case what's happening right now is just noise and you don't need to worry about it.
Warren Buffett's favorite holding period is forever.
Well, yeah, but he just unloaded a heap of stock in Apple and a number of other things, right? So he's sitting on a lot of cash right now, and I believe the reason why he's sitting on a lot of cash is because he's hoping he can buy assets at a distressed price.
Well, that will happen because the market is hugely overpriced. The price-earnings ratio of the market is bigger now than almost twice as much as its historical average. It is hugely overpriced. It simply has to drop. We don't know when that'll happen, but it will most certainly happen. So that's why Sasha is recommending buying the stocks in gold and silver companies, which I have done for a while. I've had nothing but a silver company. Then this morning I decided this is not doing much, even though analysts are predicting a 70% increase in the value of EXK. So I sold my EXK so that I could buy SPY and sell covered calls on it. And then I made, how much did I make? Over $350 a contract. Maybe the wrong thing to do. The markets will sometimes, often actually, decrease to a greater extent than the premium income that the sellers of calls get. But we know that the markets will decline.
But if you feel that way, Milan, why bother buying the S&P 500 ETF and then selling covered calls? You might as well just buy the S&P 500 buy right index. It'll do it for you.
I haven't thought about that.
That's not a recommendation. I'm just saying that there's, that there is efficiencies. There's a lot of different options. I simply want to say to people, don't be disheartened, especially if you are a person who's very, very unhappy with the direction of the United States and Donald Trump. Don't be disheartened and think, well, as a result, there's no investment opportunities anymore. There's plenty of investment opportunities. Markets come and go. Good presidents come and go. Booms and bust cycles happen. We're used to that. So just, take a breath, step back, have a look, and then see what you think fits your portfolio and your risk horizon. I don't want to wait 25 years to make money. I want to make money tomorrow. I want to make money next week.
Shaquille, you see, the problem is that, as Milan suggested, the market has been overpriced for some time now. It didn't start with Trump. Last year, market was overpriced by the end of the year. And if there would be a natural cause of action when market corrects itself, because the earnings are not that great, it's a monster factor, so you rearrange your portfolio, you're taking some different positions. But when one man forces the market dive 20% in one day, this is something different. Now we are all basically victims of Trump's whims, and one day market goes down, the next day he tells it's time to buy, and in 4 hours he lowers tariffs to 10% on all over President Biden. I'm not suggesting that it's probably illegal what he's doing. It's insider trading for most likely. Nobody has time or inclination even to look into it, because they already they know that Trump is almost invulnerable to any legal processes. We've seen it in the last few years. So nobody wants to bother anymore, because a lawyer who will take the task to take him to answer this. So the law firm of that lawyer will go into audit. He will be disbarred most likely, and pretty soon. So nobody can do anything.
So that's
Now,
why spread trading is so important, though, right? That's why spread trading becomes really important, because you're immune from those market fluctuations if you're long one thing and short the other. So, for example, if today you were long the S&P 500 and you were short the Nasdaq index based on the prices before it came on, the Nasdaq index was down 1.4%. The S&P 500 was down 1%. So if you were long the S&P 500 and short the Nasdaq, you'd be up 40 basis points, right? Now, if you were to close that position, right, and then you annualize that, 40 basis points is 2% a week, right? Now, I'm not suggesting it's going to be as easy as that, but what I'm simply saying is, if you're concerned about market volatility, that's why you wouldn't want to take an outright position, right? Because when you buy something, you're expecting that thing to go up relative to the US dollar or to whatever. So why not buy this thing and sell that thing? Why not look at AT&T and Verizon and say, well, I think that one of them is going to perform better than the other, and so you buy one and sell the other, because now you're only trading the difference between their share price. And it doesn't matter if the whole market moves up 10% or down 20%, it doesn't matter. All that matters is the difference between the share price of those two companies. You could do that with entire sectors of the market. You can take like the banking sector and put it against the insurance sector, or things like that. So what I'm saying is a lot of different ways of doing this. There's ETFs that will give you that sort of exposure. There are futures contracts that can give you that sort of exposure. There's a lot of different ways of being able to do this. If you think the US is problematic, then you could perhaps take something like the world index that will actually give you exposure broadly across the entire world, in the hopes that even if it falls, the whole world won't fall forever, and certain countries might recover faster than America does, but your entire portfolio is a lot more diversified. So as I said, we can get into the politics of it, but the issue is, how do you best manage your own portfolio and your own investments? And I think that's a good way of looking at it.
To do that, it's very difficult for individual investor, because you already have certain portfolios, you have certain stocks, certain positions. So the easiest way to do it actually is to unwind all your positions. Zero. You sell your stocks at loss, at profit, whatever it might be. I was protecting my positions with covered calls, most of them, and that helped me to withstand certain, even today's market fall. I was not doing that badly because of this covered calls, which increased in price substantially, and that helped me to offset certain losses. But again, to go into what you're suggesting, I would first unwind all positions, puts, calls, stocks, whatever I have, coming to zero. And then I would start trading small positions, probably long S&P, short Nasdaq, or maybe vice versa. Because right now, the next couple of days are quite crucial, not only for Nasdaq, but for overall market. We have reportings from Microsoft, from Meta, from Google, and that will decide where market direction goes. Either it will start its recovery, or it will nosedive. And the problem with this report is that it's not the earnings themselves, it's a guidance for next quarter. And you can report good profits and income and still be very careful. And right now in this environment, nobody can predict any future earnings, even big companies. So that would offset the positive result of their earnings, and stock can go lower and tank all the market with them. So if you have inclination to speculate, is to buy puts on S&P 500 and most positively Nasdaq, because they will provide even more bang, and maybe that's the way to go. Again, gold
Well,
and
but what you're suggesting is sell everything and just take a short position. I would suggest that if you've got a portfolio already, you can take some protective put options in case the market falls, and then have a look at where else the markets might go up. And if I could just use some of the tech companies as an example, if you take Google, obviously Google, Meta, that they make, sorry, Alphabet, I should say, they make good money out of America, clearly, but they operate in basically every country in the world.
yeah,
So, and their overseas operations are mostly domiciled out of Ireland. So that's what I'm trying to get at, is that a lot of these big companies aren't necessarily going to be hit as hard as other companies. So vehicle manufacturers in the United States, for example, they might be hit hard, but are they going to be? For example, you take General Motors. How many vehicles from General Motors are sold to Canada? And as a percentage of their total revenue, how much does that actually equate to? Now, you'll see GM cars in the Middle East, but you won't see them in Europe, and you won't see them in Asia, and you won't see them in Australia as a general rule for the most part, right? So how much are the tariffs really going to hit them? The other thing is that, yes, you're in earnings season, but when those results come out, whether it be right now, whether it be 5 years ago, what we've seen historically is that people tend to think that if earnings are strong, that drives the share price higher. It's often not the case. It's often the case that big institutional investors have already bought the stock and they're waiting for those earnings so they can unload it. So the guidance that you get from earnings, again, I think that analysts put too much attention onto those earnings results
the guidance,
as an indicator as to what's going to happen next.
You know
guidance is more important than the earnings these days, unfortunately.
what both of you are saying has is correct. However, the trouble is it requires a great deal of attention and activity. Many investors don't have the time for that. What we recommend is not buying individual stocks, but buying the U.S. market as a whole by buying an exchange-traded fund which tracks the S&P 500. And SPY happens to be the best. I don't need to explain why, but I will if anybody is interested in that. So if you buy the S&P 500 through getting the exchange-traded fund which tracks it, and SPY is the best, you don't have to be constantly active, because what you're doing might be correct much of the time, maybe even most of the time, but it requires constant attention. What we're recommending is buy and hold the SPY. Requires no attention at all, because most of our investors, which might really represent most of the people on this planet, have jobs that they have to work at.
Oh, it's a different situation.
But Milan, let me just say to you, I'm never going to be able to compete or overcome what you've said, right? The majority of people, yes, should just go and buy the S&P 500, just hold it, and that's the end of it, right? We don't really have a show if that's what we say. We might as well just say that, and that's it, right?
Absolutely.
So I'm coming in and talking about alternatives to doing what you've suggested. Now, for example, hang on, sorry. For example, you said the S&P 500 is the best. Well, is it? It depends on who you are. If you're prepared to accept a little bit more volatility, actually, the Nasdaq outperforms the S&P 500. If you really want safety, why buy the S&P 500 when you can buy the Dow Jones, which is only 30 stocks? If you're living in Canada and you're worried that if you buy the American market and the market or the US dollar falls, that even if the market goes up, you may have still lost money, then why don't you just invest in the Canadian market? There are ETFs that are a broad-based ETF over the Canadian market. If you look at the Australian market, for example, if you're sitting in Australia, do you want to go and buy the S&P 500 and be subject to FX exchange rates, or do you want to just buy the ASX 200 or the FTSE 100, etc.?
You are missing Milan's point. Milan's point is a way of busy people or lazy people or both not to make any decisions. Here is S&P 500 and here is everything else. So you put all your money in the S&P 500, even if it will go down for the next 5-6 years, but it will be some point when it will reverse, and in 10 to 15 years will recover all its losses. So in 15 years you will be exactly where you are today, and this is fine by these people because they don't have to do homework.
Yeah, absolutely. I've got his point, but I'm saying if you're sitting there in the UK, right, and you earn money in British pounds, right, why not just buy the FTSE 100? Why would you buy the S&P 500? What's the benefit of buying the S&P 500 if right now what you're concerned about is Donald Trump is going to wreak havoc and the US dollar is going to fall, etc.? Why not just buy your own market as opposed to buying that? And it doesn't take any more effort. Buying the Nasdaq is the same effort as buying the S&P 500. Buying the FTSE 100 ETF is the same effort as buying the SPY. That's what I'm trying to get at. Is that if you're living outside the US and you're a bit concerned about the US, invest in your own market, because all the markets, every major country, the markets pretty much travel in the same trajectory.
Yeah, well, that's
It's an upward
true.
rise.
If you take a look at the various markets, the U.S. market has led all the other countries, all of them. There's a German market that's an important one, and the European market, the Australian market. The U.S. market has led the world in for a very long time. So I'm a Canadian, and I have owned nothing but the U.S. dollar and the U.S. market for a very long time. I've been investing for 50 years, and I've been wrong for 35 of those 50. But recently become very confident by owning the U.S. market, and I encourage our followers, we have about 300, to buy the U.S. market. You can buy the U.S. market if you live in Great Britain. You can buy the U.S. market if you live in Australia, and you can buy it. Why would you do so? Because it has been the best performing market for nearly 200 years. And yeah, empires have 100%
Yeah.
failure rate, but the
But in percentage terms, the US market, broadly speaking, the Nasdaq's outperformed the S&P 500. I won't go into that. The US market has outperformed other markets in percentage terms, but when you account for FX fluctuations, that's not necessarily the case depending on when you did it, right? If you bought the S&P 500 just after, if you were sitting in Europe and you converted your euros into US dollars just after Russia invaded the Ukraine, and the euro was sub a dollar, it was below parity with the US dollar, and then you bought the S&P 500, where would you be today? When you went to convert the S&P 500 back into euros so that you can spend it in the country you live in, even though the S&P 500 has outperformed the DAX, has outperformed the FTSE, etc., over that period of time, the US dollar has not outperformed over that period of time. So that's why I'm saying that I'm not giving advice. I'm just simply making the suggestion that if you're not American, it may be worth your while to invest in, just like you want to buy the whole US market, it might be a good idea to spread your investments a little bit and buy the entire market in a few other countries, and most notably the country that you're in. If you're in Canada, the Canadian market's good. Have a look at putting some, not all, but some of your portfolio into Canada. If you're in Australia, buy some of the ASX 200 or the All Ordinaries. If you're in the UK, buy the FTSE or the DAX if you're in Europe, etc.
Peter Lynch said that diversification is the same as diversification. And if you own nothing but S&P 500, you are sufficiently diversified not to need to go to other countries and to pick
I don't agree with greatest respect. Sorry, Sasha.
You can disagree with Milan. I would disagree with Milan, but Milan has a very specific mindset for like-minded people who, for some reason, either they're busy or they're lazy or both, or they don't want to think. S&P 500, that's it. There is only one way to invest, according to Milan, is the S&P 500. There is nothing else. Forget about any diversification, different countries, different positions, the gold or just the index.
But as I said, Sasha, I can't argue against that. If that's how people want to invest, that's
Yeah,
fine. If people want some other ideas, I can give them some other ideas. And the
absolutely.
most simple ones is if you really want diversification, buy the Russell 2000 because you've got 2,000 stocks instead of the 500 stocks of the S&P 500. If you really want some safety, buy the Dow Jones because it's 30 stocks. And if you actually want higher rates return with a little bit more volatility, the Nasdaq normally provides that for you. And
What I
buying that
said,
Nasdaq ETF is just as simple as buying the SPY.
what I
So,
said at the beginning of the program today, in 4 words, I can show our viewers how to outperform the vast majority of investors, including professionals, after fees. And the 4 words are buy and hold SPY. Would
okay.
that not outperform the vast majority of investors? It would, wouldn't it?
Could be.
Professionals included after fees.
Well, I
Over.
don't know about professionals included, but
I don't know about the strategy in next year and a half or so. I think it could be a tragic for many investors, including those investing in S&P 500. And if S&P 500 will nosedive another 20, 25 points, I don't think that the strategy will be very helpful. However, everyone is in charge of his own or her own
When the
investments.
S&P 500 nosedives and becomes a bargain, if you have an allocation, asset allocation accounts for more than any other aspect of investing. If you have a 50-50 asset allocation, 45-55 also work, a 60-40, they all work. Wall Street doesn't want you to do that because the money that you have.
hang on, hold up, Milan, because as soon as I talk about diversifying away from the S&P 500, you guys sit there and say, no, our investors don't want to think. So it's either 100% just buy the S&P 500 or it's not. If you want to have asset diversification and split your investments over a few things, which is what I'm suggesting that people do, right?
Yeah, absolutely.
Then there are different ways of being able to do that. That's what I'm saying. Mutual funds, ETFs, etc., is a good way to be able to get that diversification without having to think too high. If all you want to do is to ring up your broker and say, I just want to buy the SPY and I'm done, okay, you can do that. But as I said, why not spread your investments out over a few different asset classes?
It requires thinking. We don't want thinking. We want S&P 500, nothing else. S&P 500. S&P 500. Just go and
Sasha and Shaquille
Sasha,
and Bilal.
then ring a broker, get some advice, and get the broker to tell you, I'll do all the thinking for you. Here's how I think you should allocate your portfolio, and let them do it for you, and then pay a fee, and you're done.
broker will steal your money through fees.
Yeah,
Yeah, but you don't want. They're not stealing your money at all. You don't want to think. If you want me to think for you, then I'm going to charge you for it. This is why structured products are so great, right? Structured products provide. They're issued by big banks, and they provide you with some exposure and hopefully a higher return than what you would get if you just invest in the broad market. No thinking required.
No,
Hey, Sasha, just really quickly, because I know you're winding down, but I've been listening the whole time in the back as the producer. But it sounds to me like there is this notion, as y'all know, I'm into sports and we're in the middle of our hockey season and basketball and all along those lines. But it sounds to me that y'all are picking stocks in some ways, to your point, Sasha, the way that some people pick their sports. So I'm imagining there's some people listening right now, Shaquille, and them just picking on you and everything, that are going to go, one of those stock markets has a cute name. It's called the FTSE. So I'm going to go and invest in them because it's got a cute name and everything like that. So I'm thinking that some people are doing that they're literally going to go into the stock because
what you could do, what you could do if you want to be cute is you could do what's that guy from Texas, Mattress Matt or Mattress Mac, I think his name is. And what he did was he used to, I think he still does it. He would sell these mattresses, and he would say, if XYZ team wins, if the Dallas Mavericks win or whoever wins, you'll get all your money back. And if they don't, well, you've bought your mattress. And he would take all that money and he would bet on that team. And if the team won, well, then he could refund everybody. He made a really great profit. And if the team didn't win, well, it didn't matter anyway because he still made a profit from his mattress sales. And was it 2 years ago, 3 years ago or something? He placed the biggest ever bet, or he won the most amount where he backed the Astros, I think, in the baseball World Cup,
World
and they
Series.
won. And
World
I think he
Series.
collected $75 million. So, if you want to go down that path, if anyone wants to set up a mattress factory with me, let's do it. But otherwise, for us to be immortals, I think spread your investments out. Look at indexes. I totally understand where you're coming from, Milan. I'm just simply saying there is more than one index. So the S&P 500 is great, but there are heaps of other ETFs available, and I think that people, including in your group, should just have a look at them. I'm not saying buy them. I'm just saying have a look at them and just see if there's something else. Because you did say to me before, buy the S&P 500 and then sell options against it. Or buy the buy right index. You don't have to think about it then. Somebody else will do it for you and you'll pay a fee.
Yeah. I think the major thing here, Sasha, is this should be a 2-hour program instead of a 1-hour program.
No,
We can go for 10
at
hours.
the end of our program. It was very interesting show. I would like to thank you both, Shaquille and Milan, and Jim, who earlier was on the program. And good luck in your trading or investments, whatever they might be. And one friend of mine, many years, he was buying some stock, and if he was buying for speculation only, so the stock would go up half a point, maybe a point. He would sell, and he would be very happy. Now that's a day trading, you may call it, swing trading, doesn't matter. But when the stock would go down, he would say, now I'm a long-term investor. So now he would study the companies, their annual reports and quarterly reports. He would become a great specialist in that particular company because he's losing a couple of $100. And I always tell him, look, if it's you're losing, sell it. You're making a good money, a bad money. Now you don't have opportunity to invest into other companies or so. This is why I'm not scared to take a loss on certain investments. Once I realized it doesn't go my way, sell it. And great William O'Neill, he was saying, if you are losing 7% from your initial investment in the company, sell it. First you sell, and then you study the company, its balance sheets, and the income statements. Then you study. First you have to sell. Because if you will study and you will realize how good the company is and stock may start recovery, you will buy back. You will maybe even more
When
shares.
the market drops 7%, it becomes a bargain, time to buy more. Most people are running for the doors when the market drops. When the market rises, take profits to reestablish your asset allocation. When the market rises and is expensive, people are jumping on board, and that does work temporarily. That's a temporary way to invest. If you have an asset allocation of, let's say, 50-50, you will always be buying bargains. There's no other way. When the market rises, you're always taking profits.
The question, what in a day or two, it will become even a bigger bargain. And in a week or two, it will become a much bigger bargain.
If you're talking about the American market as a whole,
only American market. To me, American market today is the most dangerous place to be.
Absolutely.
Go to food, go anywhere.
Yeah, it's grossly overpriced. But when it becomes, here's what an investor that studied with Benjamin Graham, a little older than Warren Buffett, but I know about him. He was a dentist. What he used to say is have a 50-50 asset allocation. When the market drops 10%, put a third of your money in there. When it drops another 10%, put all of your money in this. And if it drops another 10%, borrow. It's a
yes, exactly. That's the point.
Also, and that would have bankrupted you during the 80s. It would have hurt you dramatically during COVID, even though you had a V-shaped recovery. It would have annihilated you if you did that during the Great Depression.
Double check on that, because most of the time you're right, Shaquille, but not on this. On this, you're not. The American market, as all markets, has always recovered. After the
depression, but no. But hang on, you can recover if you can hold the position. If you've borrowed and you've leveraged into a position, and the market's fallen, can you withstand the fall? And what you just said was you put a third of your money in, put all of your money in, and then borrow. Well, if you borrow and the market falls, right,
that has
and you're using your position as collateral, you could very well get closed out before the market recovers. And I'll just remind you, LTCM, if you actually have a look at the positions that they had, they were correct. They were correct. If they had have been able to hold their positions for just a handful of months longer, they would have made a bonanza. But what happened? They couldn't make their margin payments and they couldn't make their interest payments.
They're enormously over leveraged. The government asked, I think, 14 or 15 banks to lend them money so that they wouldn't panic the rest of the world. Oh yeah.
Well, anyway, please be aware of dangers of the market. In my opinion, U.S. today is a very dangerous place. It could change. I'm open to different scenarios, but right now it's very dangerous. Listen, have a great trading in the next few days, and we'll see you next week. Same place, same time. Thank you very much,
Stay
everybody.
safe.
Thank you.
Bye, everybody.